Hey friends, today we're discussing a book that reveals 25 secret trading rules hidden within its pages. If you understand these rules, trading won't just be a game for you, it will become an art. However, if you don't grasp them, you'll end up like the 90% of traders who enter the market hopeful but leave empty-handed. The book is titled Times Trading Rules That Work, Times by professional trader Jason Alan Jankovsky. These aren't ordinary rules. Behind each one lies a secret that you won't find on any chart. These rules will change your mindset and maybe even your entire life. Watch the video till the end, because each rule is the key to understanding the next one. Let's jump into the real trading rules that truly work. Rule number 1. The very first and most important question is, why are you even in the market? Everyone wants to make money, but are you here to gamble each day? Or are you thinking like a professional trader? Until your purpose is clear, your trading decisions will always be messy. Some people come into trading simply to try their luck. Don't let emotions drive your trades or blindly copy others. A professional trader knows exactly why they're in the market, understands their strategy, manages risk, and also knows when not trading is the smartest choice. If you don't understand why you're in the market will teach you by taking your money. So take time to reflect. Why am I even here? Rule number 2 answers that question. Trade, but always with a plan. The biggest trick the market plays on us is making us emotional. And every emotional decision costs us money. Without a plan, you become a reaction machine. News breaks, you trade. A candle lights up, you buy. Someone on YouTube says sell, you sell. Professionals don't do that. They create a plan first. When to enter, where to set stop loss, when to take profit, and when to simply sit out. Before each trade, if you can clearly answer these 3 questions, why am I entering? How much risk am I taking? And when will I exit? You're on the right path. Without a plan, you're just chasing noise. Remember, no plan means no stop loss. Rule number 3, control your risk, or risk will control you. Losses in trading are guaranteed, but wiping out your account is your fault. Every time you think, this trade is a sure thing, and put all your money in, you're setting yourself up for disaster. Imagine building a palace on a weak foundation. Without even a gust of wind, it collapses. Professional traders never risk a large portion of their account on one trade. They measure risk first and ask themselves, what if this trade goes wrong? That question saves them, while others lose everything by going all in. Winning depends on skill, but staying in the game depends on risk management. Even risking 1% to 2% per trade is enough. The real trader wins the long race, not the one who crashes on the first speed bump. Next time you trade, ask yourself, if everything goes wrong, how much loss can I actually handle? Rule number 4. If a trade doesn't feel right, don't take it. This may sound simple, but it's profound. Many try to find logic by analyzing charts, news, or YouTube videos, but deep down there's a voice telling them not to do it, yet they ignore it. This often leads to losses. Trading isn't only about technical skills, it's a mental game. Your mind is your first warning system. If a trade makes you uneasy, if your mind is not calm, your hands shake, or your heart races, you're heading for trouble. Professionals don't jump on every signal, they only trade when both their system and heart are calm. A confused mind never wins. So listen to your instincts. If something feels off, just stop. Skipping trades can be wins too. Rule number 5. Your biggest losses come from trades you shouldn't have taken at all. Think about how often you jumped into a trade out of boredom or some random feeling without solid reasoning or a system. What happened? Losses. This happens to every trader, but pros don't repeat mistakes while beginners never forget them. When in a trade that doesn't fit your rules, you feel fear, panic, and regret, while the market waits to exploit your weakness. Don't feel compelled to take every trade. Skipping the wrong trade is a skill, because the most dangerous trade isn't the one that lost money. It's the one you never should have taken. Next, we'll explore why overtrading is your worst enemy and how to control it. Rule number 6. Don't overtrade, or the market will punish your patience. Overtrading is the most common and costly mistake beginners make. Sitting all day in front of charts, seeing every small move as an opportunity, and making trade after trade doesn't make money. It wears you out and burns your capital. Professionals treat trading like fishing. They don't cast their line at every bubble. Sometimes the real skill is waiting all day or even all week. New traders think more trades equal more profit. The truth is the opposite. More trades mean more mistakes, emotional trading, and capital erosion. Trading is a marathon, not a sprint. Trade less, but trade smart. Rule number 7. Exiting at the right time is even more important than entering a trade. Your first loss is actually your best loss. When a trade goes against you and you think, "I'll hold a bit longer, maybe it'll turn around," you're comforting your ego and ignoring logic. The market doesn't care about your ego. Every big loss starts by ignoring a small one. Professionals accept when a trade hits, stop loss, and get out, because that small loss saves them from a disaster. Inexperienced traders turn small losses into revenge trades, which hurt their entire account. Small losses are the cost of trading. Big losses are the price of carelessness. Accepting defeat is sometimes the first step to winning. Next, we'll uncover the deadliest thing in trading. It's not external. It's inside you. Rule number 8. The market is not your enemy. The real enemy is yourself. After a loss, many blame the market, but the market is just doing its job. The real battles are inside your mind. Greed, fear, revenge, impatience. You traded without a plan, removed your stop loss, ignored logic, and trusted gut feelings, then blamed the market. The truth is, you fooled yourself. Professionals understand the hardest fight is controlling their emotions. No strategy or indicator can save you until you master yourself. The market is a mirror reflecting your true self. Next, we'll learn why trading every day isn't necessary and can be dangerous. Hidden in the next rule is the real meaning of patience, the trait that turns amateurs into pros. Rule number 9. You don't have to trade every day. Sometimes doing nothing is the best trade. Think about it. Do doctors perform surgery daily? Lawyers don't go to court every day. So why should traders trade daily? The market is open every day, but quality opportunities aren't. Real traders don't count days. They wait for quality setups. New traders feel pressure to trade daily and often wipe out their accounts. Professionals know cash is also a position, and waiting is a strategy. If there's no setup today, sit tight. Save your energy and capital for when the right opportunity comes. Patience is your greatest asset for survival. Next, we'll explore why protecting profit is more important than making it. Rule number 10. Making a profit isn't enough. Protecting it is even more important. You make a good trade and are in profit, but then think, maybe it'll double, only to see your gains disappear quickly. Many beginners treat profits as paper profits, not real money. Professionals use trailing stops, set targets, and control greed. Sometimes walking away with a small profit is the smartest way to avoid bigger losses. Greed can turn profits into zero. Next, we'll learn why getting stuck in a trade is so dangerous and how to break free. Rule number 11. Don't marry any trade. It's just an opportunity, not a life partner. This harsh truth means you should never get emotionally attached to a trade. Many traders believe a losing trade will reverse and hold on, losing patience, money, and sometimes their identity. Trading is a business decision, not an emotional one. Professionals treat trades like deals. If it's not working, they cut losses immediately. Emotional attachment turns trading into gambling. The market doesn't care about your hopes or wishes. It runs on facts. Next, Rule 12 will teach you 3 essential questions to ask before every trade, which can save you from bad decisions. Rule number 12. Before every trade, ask yourself 3 questions. If the answers aren't clear, don't trade. Question 1. If this trade goes against me, how much loss can I handle? Most only think about profits and ignore potential losses, which is dangerous. Question 2. What's the logic behind this trade? Is it based on a proper setup or just a feeling? If unclear, it could be a mistake. Question 3. When will I exit this trade in profit or loss? Do you have your target and stop loss set beforehand? Without a plan, you're gambling, and the market never rewards emotions or luck. Next, we'll see why sometimes the best trade is the one you never make. Rule number 13. Often, the best trade is the one you never made. Avoiding bad trades is as crucial as making correct entries. Many new traders feel they must do something every day the market is open and end up forcing trades without setups or logic. Professionals step away when their mind isn't clear, their strategy fails, or they're on a losing streak. They take breaks to analyze and reset because trading is a mental game, and trading with a tired mind is setting yourself up to lose. The next rule explains why keeping a trading journal can transform an ordinary trader into an exceptional one. Rule number 14. Keep a trading journal because your biggest teacher is your own trades. If you don't document why you entered a trade, what went right or wrong, and your emotional state, how will you learn? Trading without a journal is like bumping into the same wall repeatedly in the dark. Professionals record every trade's entry, reason, emotional state, result, and lessons learned, even for trades lasting just 5 minutes. Reviewing your journal reveals recurring mistakes, emotional triggers, and growth areas. This acts like a mirror, showing your trading patterns and weaknesses. Anyone who looks in that mirror daily learns how to beat the market. Next, we'll discuss the psychological trap that causes the most damage to the fear of missing out. Rule number 15. Don't trade out of FOMO, fear of missing out. This fear is the biggest enemy and causes the most losses. You see a big move, candles shooting up, or someone shouting, "Don't miss this opportunity," and without thinking, you jump in. But the money of those who rush goes to the pockets of those who wait patiently. Trades made from FOMO usually lack a plan. No stop loss, unclear targets, and a mind eager to take quick profits, leading to wrong decisions and losses. Professionals know not every opportunity is theirs. Missing a move isn't a disaster. The market offers new chances daily, but your capital is lost only once. Avoid FOMO. Only trade when your system, rules, and mind agree. Next, we'll learn why the trend is your friend. Rule number 16. The trend is your best friend. You've heard this 1,000 times, but do you really listen? New traders often trade against the trend, thinking a reversal is imminent. Trading against the trend is like swimming against a current. It's exhausting and unproductive. Going with the trend gives momentum, comfort, and better odds. Professionals view the trend as a friend, not an enemy. Next, Rule 17 explains why choosing the right position size is crucial to protect your trading account. Rule number 17. Picking the right position size is your biggest protection. You can have the best strategy, but if you trade with the wrong size, one bad loss can wipe out your entire account. New traders often put half or all of their capital into one trade, thinking it's a sure thing. But nothing in trading is guaranteed. Professionals decide position size first, then enter trades. Consistent risk management ensures survival in the long run. Survival is the real game. The right position size is the secret weapon. Rule number 18. There's no such thing as a sure thing in the market. This rule is vital but often ignored. If someone promises 100% guaranteed trades or tells you to go all in, be very cautious. The market has countless variables: news, global events, liquidity, and more. Even the strongest-looking trades can fail anytime. Professionals accept this and never overcommit out of overconfidence. True strength lies in humility. Arrogance is the market's biggest enemy. Humility is its greatest ally. Next, we'll talk about the deadliest habit: revenge trading. Rule number 19. Revenge trading. Trading to get even is the deadliest poison in trading. After a big loss, your mind urges you to make it back immediately. This is where the trap begins. Your mind isn't calm. You ignore plans and setups and jump in fueled by anger. One bad trade follows another. Professionals calmly accept losses and understand they cannot be instantly recovered. Recovery comes through discipline and following the plan. If you're losing, stop, take a break, learn, and return with a fresh plan. Quit revenge trading, or else trading will quit on you. Rule number 20. Never follow any expert's advice without question. Social media, Telegram, and YouTube are full of people telling you to buy or sell and promising jackpots. But they won't manage your account when you lose. A real trader conducts their own research, creates their own plan, and takes responsibility. Listening to experts is fine, but the final decision is yours. Blindly following others is gambling, and there's no room for gambling in trading. Gain knowledge, not blind faith. Thinking for yourself makes you a self-reliant trader. Rule number 21. Treat every loss as the price you pay to learn. New traders panic when they lose, get discouraged, or try revenge trades. Professionals see losses as lessons. Each loss hides a teaching. Whether risk management errors, poor timing, or emotional mistakes. By learning from losses, your losses shrink and profits grow. Losses are teachers. Don't let ego block learning. 0 losses don't exist, but 0 repeated mistakes can happen. Rule number 22. Patience is the rarest, but most rewarding trade in trading. New traders rush for quick profits and jump into every setup. The market doesn't provide opportunities daily. Professionals know waiting for the right trade is the biggest profit. Only trade when your setup is fully ready and the trend confirmed. Jumping in on half-baked signals is like crossing a river in a sinking boat. Be patient. Real money comes over the long run. Discipline and perspective make trading work, not daily clicking. Rule number 23. Keep your trading system simple. Many new traders believe more indicators mean more success, piling on charts and tools, which only causes confusion. Simple strategies beat complex ones because execution matters most. Professionals have clear rules: when to enter, exit, and stop. Make your system so simple you can follow it with your eyes closed. Next, we'll learn why chasing news can destroy your trading. Rule number 24. Stop chasing the news. News is often delayed. By the time you hear it, big players have already acted. Average traders chasing news usually get trapped. The market runs on rumors more than news itself. Use news as reference, but don't base trades on it. Your chart, system, and setup must make the real calls. News-based trades are impulsive and lead to losses. Professionals trust facts and price action. understand news, but watch price. Finally, the last rule explains why continuous learning is the true strength of every successful trader. Rule number 25. Always stay a student in trading. The market never stops teaching. Many traders think they're experts after some wins, and stop learning. That's the biggest trap. Real professionals know learning never ends. They analyze every loss and profit and constantly study new strategies. The journey of learning never ends. The more you learn and update yourself, the better trader you become. If you stop learning, the market will teach you in a very costly way. Promise yourself to learn something new every day. And that's it, friends. The 25 trading rules that actually work. Think about it. Every single one of these rules is simple, but together they're powerful enough to separate the 10% who survive in the markets from the 90% who walk away empty-handed. What Jason Alan Jankovsky did in this book is not give you fancy indicators or shortcuts. He gave you a mindset. Because trading isn't really about charts. It's about discipline, patience, and controlling yourself when money is on the line. If even a few of these rules clicked for you today, I promise your trading will already start to look different. The market will always be uncertain, but your rules, your system, can keep you grounded. So, before you place your next trade, ask yourself, am I following these rules, or am I just gambling? That one question can save you months or even years of frustration. If you enjoyed this breakdown and want me to cover more books or trading psychology lessons, let me know in the comments. And if you found value here, give this video a like, share it with a trader friend, and subscribe to the channel so you don't miss the next deep dive. Remember, trading isn't about being perfect, it's about being prepared. Stay disciplined, keep learning, and I'll see you in the next video.